What's going on, traders? It is currently Saturday, June 6th. I want to do my trade recap for yesterday, Friday, June 5th. I had a green day. I finished up around $12, which is pretty good. So in this video, I want to go over those trades. The first stock I want to show you is Apple, and I traded 3 shares of it on the long side. This is the 1-minute chart for Friday, June 5th. As you see, it opened up pretty strongly, sold off a little bit, then went back up. And this is a very common kind of technical analysis pattern or chart pattern. It's called a bull flag. And what it is, you see a nice move up. That's kind of the pole of the flag. And you see the people taking profits, the sellers just selling their shares. So you see a little kind of downward momentum. And then the buyers who miss the initial move up, who have FOMO and they want to get back in, once they see that there's been some selling pressure, then they rush to get back in, which is the second move higher. And what you want to do is you want to enter right when you have confirmation the stock is going to go higher. So it's kind of right around there. So what I did was I entered on this candle right there, as you see, make it a little bit bigger. So I entered on this candle right here, and that was kind of confirmation that it was moving higher. So I took 3 shares, and then I sold 2 shares here, and then another 2 shares right here. It was a pretty easy trade. The stock market was pretty hot, and I wanted to take advantage of that by taking a long position in Apple. Over kind of watching charts, I've just developed an intuition on what patterns I like, so I just kind of go off that. And of course, intuition is pretty helpful because it's just, it's gut feeling, and people talk about if it's subconscious or, but I like to go off my intuition and call it trader's intuition. So that was kind of my analysis for Apple. The next stock I traded was akam, which I actually lost money on. So akam was a short, and it's a typical kind of pattern I like to trade. Basically, you want to see a strong sell-off in the open, and then which means people are just, it's not a good sign, especially. So akam closed down 2.79% of the day when the market closed up around like 3%. So really, there's only one way down for that type of stock, and it's going to go down. So what you want to see is kind of a similar thing, a strong move down, but instead of a bear flag, which is the opposite, where you see buyers buying and another leg down. Typically, what I like to trade is you see a nice move down, and then you see kind of a descending triangle pattern where there's a series of lower lows. And what that means is that buyers are trying to go up, but sellers are just pushing them down and down and down until kind of the point of no return where it breaks through. And I thought that point of no return would be right here. So I took 10 shares short right there, and I was expecting for the stock to kind of continue down like that, and it didn't. So what happened was it just went up and up and up, and then I stopped out on this candle right here because the market was hot, and I just didn't know what was going to happen. I want to limit my risk. In hindsight, of course, the stock eventually went down and kind of trended down nicely, but hindsight could have been the opposite, where it could have went up like that. So it's always good to manage risk. The best thing about it is that if you know your trade statistics, you should have more wins than losses, and if you do, then you should be profitable, assuming that the magnitude of your wins or of your losses are still smaller than your wins. And you could even have more losses than wins, assuming the magnitude of your losses are still smaller than the magnitude of your wins. So that was akam. Again, that was 10. So Apple, I was up like $6 or a couple bucks, $6. akam, I was down $7. And then I took a trade on Enphase. Enphase was a good trade. So this is kind of a red to green move, I guess you would call it. Let me show you where I entered. I entered right here in this candle. And the idea is it sells off, but then kind of so if you see similar to akam, you have the sell off down like that. So you have that move, and then you also have this kind of, you could view it as a descending triangle. So the question is, why did I go long and not go short? Well, the answer is it broke kind of the descending triangle because it broke above. It made a new high. And if you look at the daily chart, Enphase has sold off a lot. So a couple days ago, it opened at $60, and then on Friday it opened at $53. So there is bound to be some profit taking, and there is bound to be some movement up. So I wanted to kind of capitalize on that, and I know Enphase from the past, so I know it likes to make big moves up. So that's why I got in long. I took 15 shares on this candle, and then I took profit on the way up. I sold 12 shares here, and then I sold my remaining 3 shares here. Now, you could say in hindsight, should I have kept the shares and just let it ride up? In hindsight, yes, but it could have easily topped out, let's say right here, and then just came back down like that. So you never really know. So that was Enphase. And then the last trade was on Walmart. So similar to Enphase, Walmart, you have the kind of nice move here. And if you take a look, this is a mini descending triangle, right? Not all patterns are perfect or textbook, but you can kind of see that. Let me redraw that. You have a strong move down, kind of a triangle, and then it breaks down. What I liked about Walmart, though, was that it kind of bounced back. Market was strong, and it was forming now an ascending triangle. So you see it was kind of moving up higher, but still had this kind of solid base. What I was looking for is a kind of a pop up to break that trend to go higher. What happened was I did not get that break higher. Well, I did for a little bit, but there was too much selling pressure, and then I ultimately got stopped out pretty much kind of around that area. So that was a small loser. But overall, I finished up around $12 on the day. Fine with that. And the takeaways for this is pretty much just manage your risk. Make sure you're comfortable with your trades, but most importantly, manage your risk. Keep your losses tight. And there's always going to be trades on another day that will make you more money. If you enjoyed this video, like it so the YouTube algorithm can pick it up. Comment down below what stocks you traded, and of course subscribe to my channel because every subscription for me is another step on my journey to financial freedom.